Hello, Cliff Stanwick, Stanwick Real Estate, and today I'm going over sold home analytics for March 2023 housing data for Roseville, Rocklin, Lincoln, Granite Bay, and Loomis, California. And it's obvious I needed more coffee to do this video today. I'm going to share the data that is provided on a monthly basis by the MLS. I don't think you're going to like what I'm going to share today. It appears that we've kind of hit a bottom and prices are going up. They're not going up for everybody, but they're going up. And the data is showing that. So let me just go over my disclaimer. The views, thoughts, and opinions expressed are the speaker's own and do not represent the views, thoughts, and opinions of Real Estate Fixed Inc., who the speaker is employed by. The material and information presented here is for the general information purposes only. So here we are. March is in the books. So let's look at March. This is basically the summary for the data I'm looking at. I'm looking at single family homes only. I'm looking at all the prices. I'm looking at the last year from January 2022 to March of 2023. There's no limit on size. It's all properties. It's all acreages. You know, it's no limit on bedrooms, bathrooms, half baths, or year built. And here's the data. The data is, if you look at this, we've got a lot more sold property than we would expect to have given the interest rates. I mean, we're selling as much property as we did when the interest rates were up around 7%. So obviously the inventory is still very low. This is looking at all the five cities. This is the average price, the listing price versus the sales price, right? And I'm just going to, this is always one of the things. March 2023 average for sale price was appreciating. I know that's a shocker, right? It's appreciating. Average for sale price was $992,000, which is up. And then March 2023 average sold price was neutral. So, but it was up 6.6% for compared to last month. So what's going on? Well, what's going on is it looks like the market's bottomed here, right? I mean, it looks like it bottomed, right? For these five cities, it appears that it was a little soft in January, and now it's gone up, and it's above what it was when, last September, which was 732, 740. Now it's 746, right? And this is, again, something I want to share with you, right? This is what's going on. So let's do something that I want to talk to first. So you saw the 746 here. Let's look at new properties. Okay, I can make this fly new properties. And when I basically fly new properties, it's down at 704, but it also looks like new properties are going up as well. So those prices were down in the 660s for new home construction. Now let's talk about new home construction. All right, new home construction, these are in the five towns, but there's very little new homes for sale in Rocklin. There's basically none in Lincoln, and I mean none in Loomis, and none in Granite Bay. So this is primarily what's happening in Roseville and a little bit in Rocklin and a little bit in Lincoln. And Lincoln's a little bit of a different market. Location does drive this. I've shared a lot of this data, but I just want you to notice again, right, on new homes, market's going up. It's gone up. It's jumped up like $50,000 or $40,000 on the sales. Okay, so that's looking at new homes. Well, what's going on with the What's going on with the old homes, right? What's going on with those, right? So the old homes or existing homes, they're at 704 is what the new homes are going for. What are the existing homes going for? They're up at 755, and look at that. They're going up too. 703 to 755, right? And what is the market highlight it's sharing? It's saying that the average for sale price was neutral and neutral. Okay. That's what those numbers show, right? So, but those numbers, again, they're showing essentially that's showing what the whole chart's looking at. And then when we throw in all the homes, it's up at 746. Okay. So 746 is the market, and it's definitely now come off the bottom. Okay. So let's start looking at all the homes, and let's look at, again, the market highlight is average for sale price was appreciating, and the average sold price is neutral. So the market ain't going down. And looking at this curve, it looks like it's going up, right? So again, let's look at this by city then, right? So I have 5 items checked here. I'm going to go and I'm going to start with Roseville. Okay, let's start with Roseville. This is the MLS data. It's going to take a while. It's not the most intuitively obvious platform, and so I've got to go clean these out. So now we're going to look at Roseville. These are basically all the houses. Well, it looks like some of the housing prices in Roseville are going in the other direction. So what is it saying about Roseville? It says it's neutral. Okay, well, what about the number of listings? Well, look at the numbers here. We got 155 solds, where a year ago we had 208. But if you look at, the data here, right? Months of inventory, we got no inventory. We got no inventory in this market. So, but we have really high interest rates, right? So this is what we're seeing. This is, again, these are all the prices. Now let's look at the new prices of the homes. The new price homes, notice that was 633. Wow, 658 versus 746. And again, it looks like from what happened in January, this market has popped up, right? This market has popped up, and now you're at 658 for the house price, where before $626. So I don't know if you remembered the last YouTube I did, but I basically sat there and said, if you don't buy a new house, you lost $30,000. Well, there's a $30,000 difference between a new home and an existing home in this, right? So, what I tried to do is I tried to look at other things too. Like I tried to look at age of homes, right? Like, what about homes that are 5 years older, right? Let's look at the newer homes. 626. Wow, 670. So if you have a 5-year-old home, you've got $56,000 more in sales price than you have in in an older home, right? So let's just say, okay, I'll go look at 2017. Let's look down around 2016, I should say. Let's go down and look at 2012, right? Look at 2012, because that's when the housing market kind of popped, right? So 670, 609. So, I mean, 609 versus 670, $60,000 less for another 5-year-old home, right? Well, let's go look at 2015, and let's look at what, 2010, 2011, 563. So again, 563 for a house that's basically 10 years old. Well, let's just look at homes that are 10 years old, right? 10-year-old home, all of them. Just say 10 years old, 563. So you're at 654. If you buy a new home, $658. Okay, so what does this mean, right? What does this mean if you buy, right now, if your home is less than 10 years old, you're pretty much hanging with the new construction, right? The new construction price is $658. The 10-year-old house, let's just do that again. 2023, 2013, 10-year-old house, right? Let's call it 2012. Let's just do 2012. And then let's go to the no limit, which is the ones that have an age. So 658, and survey says 654. So if your home is 10 years old, the average home, and what that means, right? Looking at this market, it says your sales price was depreciating and your sold price is neutral, okay? When I go, that's what the market's saying, right? So what I'm trying to share here is this. There's a lot of market dynamics going on, and the market dynamics are driving this market, right? We have low inventory. We have existing homes that if they're selling very quickly, they're by the most motivated sellers, which I've explained in other videos. It's people that are going through a relationship breakup, a death, or they're relocating and leaving the area. And those homes in my video, they were $30,000 less than these averages. Okay. And so you're not even seeing the impact that a lot of this price, the average sales price on these newer homes, they're being held up, especially looking at the days on market, right? And when I look at the days on market, right, 50 days, right? All the motivated sellers, their houses are gone in 10 days. Okay. It's 50 days. So when you look at the data here, okay, when you look at the data here, this market's artificially high on even the average prices because most of these homes are gone in a week. And so you have a lot of stale inventory that are, this is the average that, and I've showed you all kinds of data where these homes are selling in 20 days. So the numbers here are, if you're selling an existing home, your prices are significantly lower. And if you have a lower interest rate, you're not selling. So let's talk about if you're going to sell and buy, what are you buying? Are you buying an older home? Well, the answer is you're not. Okay, so let's talk about another market dynamic here. We had a tremendous amount of bad weather earlier this year, and a lot of builders didn't pour their pads, their foundations. So whatever you think you're seeing with the new home construction, which I showed you was a month, it's going away, right? But also, let's look again at the inventory that is out there, right? The inventory is basically 1.5 months, which is not 50 days. So again, the prices are not really reflecting the distress in this market, okay? It's really not. And that's what what you're really seeing here. Okay. So another thing is I went through and I pulled a bunch of data. Okay. And hopefully this is going to kind of be helpful. All right. And one of the things I want you to notice in the data is there's not a lot of sales here. I mean, 17 sales in Loomis in a month, 25 sales in Granite Bay in a month. And then, 3 times the sales in Lincoln and in Rocklin, and then twice as many sales in Roseville, right? So what I want you to look at is I want you to look at the data here, because here's the point I want to share with you. All average sold prices, all homes, all years, is $633,000. Now, this is different than Zillow's data of 621. So it's 10 grand more, even though Zillow's saying it's down 4.3%. And again, this was just updated. It's not as bad as you would like it to think, because it really doesn't compare a lot of information on the inventory. Another thing that's really problematic with Zillow now is they don't have, you can only go back like 5 years now because of the way they changed their Zillow home index. Okay. So you really can't, these are looking at the single family homes. And then the other thing I want to share with you is the data for the single family homes. My data was, if you look at single family here, it's 630. All right. There's 621. My data using the housing data is 633. All right. So let's just assume my data is good. All right. Year built, new houses right here, which represents 35 of the sales. So I think it's a pretty valid point, are 655. So new homes are right now out of the gate are $25,000 more than the average of the sold prices. Okay. Now you look at the existing are now essentially $7,000 less than the average sold price. If you look at the 5-year-old prices, which there was 32 sales, they're at 670. So again, the newer homes are appreciating still in this market, and there's a real simple reason why that is happening. They've got backyards. Okay, a lot of these new homes, they don't have backyards, right? But you have to look again. If I'm paying 6 to 7% for a loan, I'm not buying a project. Okay, and I've gone through this. I tell you, you have to sell a home just like a new home. A new home doesn't have any problems. If you have problems with your house, you're bleeding. You're bleeding at the close, right? You've got to have home inspections. You've got to do a lot of things right. And I have a lot of other YouTubes that you can watch on this, right? I'm beating this senseless. Your older home is depreciating. Your older home is not wanted in a high rate environment for home loans. So what do? Well, you either have to fix your house and update it and upgrade it. And trust me, I have never done that. I remodeled this house when I bought it in 2002. It's a ranch in Loomis. And my intention was to never do anything other than paint and doors and whatnot. And the next person who buys it is probably going to tear it down to one wall and remodel it, or they're going to scrape it, because I live in Loomis. So, that's been my strategy, or our strategy. But that's now in this new market with high interest rates, that doesn't make any sense. What makes sense is, if you're a buyer in this market, is to only buy a new home. If you have an older home and it's over 15 years, right? If it's over 15 years, right? That is basically, in some cases, the point of no return. On my chart here, it says 630, but there was no sales. There was only 10% of the sales. A better data point to look at is to look at these ones that are essentially 22 years old. And now you're down at 615,000. All right. And so these newer homes, are basically 5 years newer and newer homes. There's a big There's a big gap. And then when you get into even older homes like 1980 to 1990, now you're down another 50,000. And then if you look at 1950 to 1980, you're down another 50,000, right? So if you're looking at your house as an asset, it's depreciating. It's depreciating and it's high interest rates there. And that means people don't have money for repairs. People don't have money for updates. People are going to buy new. So what do? Well, I think you need to sell your older home if that meets your, your living situation. And I'm going to make a video that's going to point out why you should sell your older home, but that's the next video I'm going to make. But right now, it's obvious looking at it here that if your home is older than 10 years, you're losing, right? And that's the point of the data I wanted to share here is you're losing, okay? And that's really what's going on here. At the end of the day, you're losing. And when you see these crazy prices in Loomis and Granite Bay, realize there's like no sales, okay? I mean, there's no sales, right? NA means no sales, means one sale, right? I mean, it just goes on and on, 0 sales, but averages 2 million. Loomis, 2 sales. You really can't, look at any of this data for, Granite Bay and Loomis. And again, I pointed this out. Markets are hyper local. Stop watching these yahoos talk about real estate. And I want to share one other thing that you have to realize now. Real estate agents have never been more desperate, okay? We don't sell new homes. And what have I been telling you for about the last month? Buy a new home. Do you need me to buy a new home? No, you do not. Could I help you buy a new home? Yes, I could. But why would you use me, right? So we're promising you what we always do, which is it's always a good time to buy or sell in this market. Buy now and refi. Well, what good is it going to do for you to refi buying a house that needs a roof or appliances or heating and air or, windows? That's not going to make you feel any better. So what? You got a lower payment and you got a ton of repair costs. So, agents telling you to buy now and refi later, that's not a winning strategy, but you know what? It pays us a commission. So I'm going to wrap this up. I want to just share with you, the data is the data, and this market has changed. And it's going to be really rugged and rough because I don't see the interest rates going down. I'm going to make my call right now. The Fed's going to raise the rates another 1/4 of a point. There's still a banking crisis, which I won't go down a rabbit hole, but there's still a banking crisis and money is going to get tighter for the people. And I'm to buy a home, and that's the reality. And I'm telling you right now, this market is turning. So if you're going to buy a new home, you've got to figure out how to do it. If I can help you, reach out and talk to me. If you have an older home and you want me to help you evaluate the value of it, reach out and talk to me. At the end of the day, you have to make some smart calls with your money. A home is an asset. It's a long-term investment. You can borrow against it in the future. Again, not financial advice. I'm not offering that, but it's an opinion. And I think if you have an asset, you definitely don't want it to be 30 or 40 or 50 years old in 15 years if you're thinking of renting it in the future. So again, I want to thank everybody for their time today. This market is changing. There's a lot of market dynamics that isn't going to make it any better. The affordability is still going to be terrible, but you're going to find that an existing home's a hard home to sell, and you're going to be under a lot of pressure to drop your prices, and that's the reality. Again, I'd appreciate it if you would like my Facebook page at Cliff Stanwick Real Estate, or follow or go out to YouTube and subscribe to my YouTube channel at Cliff Stanwick Real Estate. If you want to contact me, you can do it at my website at stanwickre.com. Again, I want to thank you for your time. I wish you all the best in your journey for home. And if I could help you, please reach out. Thank you.